Welcome back to the Travis Can I Have This podcast. If you listened to my first episode and you're coming back to listen to this second episode, thank you so much. I do not deserve you coming to listen to me more than once. I hope I don't scare you away today, because today I want to talk about the two most popular things to talk about at a party. I want to talk about politics and I want to talk about taxes. The amount of times I go to parties and I just talk about politics and taxes, I walk away with so many friends, right? Man, I know people don't like talking about this, but there are two unavoidable things going on right now. The first is there is a new president in the White House, and he has said a lot of things related to taxes. The second thing is, as a dentist, your biggest expense every year is your tax bill. Assuming you are reporting your taxes legally and appropriately, it is your biggest expense. So knowing how is this new president going to impact my taxes for good, bad, maybe a little bit of both, is extremely important to know. And there are some crazy rumors going around. So we're going to talk about what those rumors are and what you can expect this year as a dentist and taxes. All right. Donald Trump is officially in the White House. And while he has said a lot of things about taxes on the campaign trail and what he intends to do, he needs the House and the Senate to officially sign off on things and create the bills and get them passed so that he can give it his nice little stamp at the end. But there are four rumors that I want to talk about that we've been hearing Trump say, and also things we're hearing from Congress on what they're saying they want to do with the tax code. But today I would like to talk about four rumors that we're hearing either from Trump or from Congress about things that could happen this year that could impact your taxes. The first one is a big one. We're probably going to spend the most time talking about this one. And the first one is the Tax Cuts and Job Act. So go back with me a few years to 2017. Trump enters the White House for the first time. And at that time, the Republicans also control the House and the Senate. There was a lot of talk at that time about overhauling the tax code. And they worked during the year, and there was some back and forth, and they eventually passed the largest tax overhaul in over 3 decades. That bill is called the Tax Cuts and Jobs Act. Cool people like accountants, we call it TCJA, or TCJA. Not really, no one says that. TCJA, you will hear a lot, or the Tax Cuts and Jobs Act. That is the first tax overhaul that was passed by Trump in 2017. One really big thing to note about this is, in order to get this bill passed the Budget Committee, so anytime there's a tax impact, it goes to the House and Ways and Means, it goes through a certain committee, and they look at the impact it will have on the federal budget and the overall federal deficit. And in order to get TCJA passed in 2017, they had to make it expire in what year? 2025. So while it had a lot of tax breaks for business owners, and we'll go through some of those, it expired in 2025. Now, fast forward to 2025, Trump is coming in the White House again. The Republicans are also controlling the House and the Senate again. And now we have this bill that they passed the first time that's expiring this year. And now they have an opportunity to do something about it again. And the first big rumor we're hearing is they want to make that TCJA permanent. Now, we said it was the biggest tax overhaul in 3 decades. I remember at my old firm, when it passed, people were freaking out. It was like, as an accountant, whether it was good or bad for clients, we're freaking out because the way that we knew how to process tax returns was changing significantly for a lot of different variables. There were a lot of new things that we had to watch for and figure out how to advise our clients on how to navigate the tax code. It really did include some massive changes. Now, the biggest headline that came out of TCJA, I would say, was it reduced the corporate tax rates. So, American corporations typically paid a higher corporate rate than other countries. And so, at least that's what Trump was saying. And so, they reduced the corporate tax rates to around 20%. Previously, they were higher than that. But a lot of the corporate rates went to 20%. Now, when we talk about corporate tax rates, we are talking about large corporations, C corporations. It doesn't have to be a large corporations, but that's typically who we're referring to, these C corporations. These are companies that pay taxes inside of their corporation. Most dental practices, if they are a corporation, they are S corporations. As an S corporation, whatever income you have left in your corporation flows to your personal tax return, and you don't pay a corporate tax rate, you pay a personal tax rate. So when we say corporate tax rates were reduced as part of the TCJA, it didn't actually benefit many dentists. However, they knew that small businesses would feel a little bit jaded by the reduction in corporate rates. So as a consolation prize, they created the Qualified Business Income Deduction, or QBI. This is a deduction of 20% of your business income, just as a free deduction for having a business. If you have an S corporation, a partnership, or a sole proprietorship, you qualified for this QBI deduction. The QBI deduction ended up being a really, really good thing for small businesses. And there were a lot of dental practices that benefited or have benefited over the past several years from getting a QBI deduction. The biggest downside of the QBI deduction is that it phases out at a certain point. This year, the QBI starts to phase out around $400,000 of income. In 2025, for example, the qualified business income deduction will start to phase out if you make more than $400,000 of profit from your practice, and it fully phases out if you make more than $500,000 of income from your practice. So there are a lot of dental practices that have been able to get the QBI deduction. There's also a lot of dental practices that have made too much money and haven't been able to benefit from this. Some other good things that came out of the Tax Cuts and Jobs Act in 2017 is it lowered the alternative minimum tax. This is a tax that is on the individual level and is basically, think of a tax on wealthy people, that you get an extra tax on your income. We call it AMT. They raise the thresholds on who that applies to. And there are a lot of dentists that benefited from that and paid a lot less in AMT taxes. They also raised the standard deduction. They lowered overall individual tax rates. They doubled the estate tax exemption. And they added much more favorable depreciation rules on automobiles. And a lot of dentists have bought in Teslas and benefited from the depreciation rules that TCJA created. Now, there were some downsides in the Tax Cuts and Jobs Act. The biggest one that you'll hear about is it reduced the amount of state and local tax deduction that you take on your federal tax return. When you live in a state that you owe property taxes to for having a house, or you pay income taxes to, when you file your federal tax return, you historically were able to deduct the amount of state taxes that you paid on your federal tax return. So let's say you lived in a state like California and you paid a lot of money in property taxes and you paid a lot of money in income taxes. Let's say you paid $70,000 this year in property and state taxes. When you filed your federal tax return, historically, you could deduct that $70,000 from your tax return. But after the Tax Cuts and Jobs Act of 2017, they limited your state and local tax deduction to $10,000. And it cost you more money in your tax return as a result. Now, if you're a business owner, you lost out on that state and local tax deduction, but you also got a QBI deduction. At the end of the day, Most of our clients we saw pay significantly less money in taxes after the TCJA than before. So it generally benefited most business owners and most dental practice owners. However, as a reminder, this was not permanent. So there's talks of making a lot of the things in TCJA permanent. However, there are talks about reforming that state and local tax deduction because that's been very unpopular among most people, but trying to make a lot of the other things like QBI permanent. It would be nice, I think, if they did make QBI permanent. It would also be nice if they raised the threshold to allow more businesses, to allow more practice owners to benefit from QBI. As a tax bill gets proposed and as we watch it progress, and as you maybe see headlines, that's the Tax Cuts and Jobs Act is probably the number one thing that you will see being talked about around the rumors of what Trump is going to do to the taxes this year. Another rumor that we've heard is that Trump would like to lower the corporate tax rates even more. So currently the corporate tax rates are around 20%, but he would like to reduce those down to 15% if you're someone who manufactures goods in the United States. I don't think this will have a big impact on most dental practices, but it's something that'll be interesting to watch. The third rumor we're hearing is that Trump wants to create the External Revenue Service. Unlike the Internal Revenue Service, which taxes people inside of the United States, the External Revenue Service taxes foreign entities or foreign countries that do business with the United States, aka tariffs. We've heard Trump talk a lot about tariffs, but he has only recently coined the phrase External Revenue Service. It's honestly a pretty catchy phrase. I could see it sticking. But with tariffs, he wants to do a 25% tariff to goods that come from Canada and Mexico. He's talked a lot about doing a 60% tariff from goods that come from China. Now, while most dentists do not do business outside of the United States and probably will not be subject to tariffs, you may get goods from companies that are outside of the United States. And this could increase the cost of supplies in your practice. The final rumor that I want to talk about is Trump has talked about potentially eliminating or vastly simplifying federal income taxes. Now, this is something he actually talked about the first time he was president, and in the first tax bill that got passed, the Tax Cuts and Jobs Act, he wanted to simplify the tax code. This is something I would be vastly in favor of. I think the tax code is unnecessarily complicated, and the tax code highlights that certain lobbyists are better than other lobbyists. And it's not always what is in the best interest of the American people, in my opinion. However, when Trump was president the first time, he talked a lot about making the tax return one page. And he really wanted to make the tax return one page. I forget what year it was, 2018 or 2019. He succeeded, and the tax return had one cover page with 5 million subschedules. Currently, the Form 1040, which every individual needs to fill out, is 2 pages, and he made that one page. But it just created more subschedules. It also created more confusion. No one really liked it. It did not simplify taxes. It complicated it, so it only lasted for 1 year. However, it seems like Trump still wants to simplify or eliminate taxes altogether. I would have a very hard time seeing him eliminate federal income tax. However, he may want to push to simplify this, which would probably bug some lobbyists in various interest groups. But if he is successful, I think that would be awesome at simplifying the tax code. Now, with any tax changes that get made, it has to clear a committee that looks at a budget on how much these tax breaks will cost, how it will impact the federal deficit. Also, there are a lot of people that are concerned that this will also impact inflation. For example, if you're ordering supplies from a foreign country, there's tariffs on those supplies, so the foreign country just makes those supplies more expensive. That would keep our inflation high, which we've been trying to get down, which would also keep our interest rates high. So all of these tax changes could have a direct impact on inflation and interest rates, and it will be very interesting to see how this all plays out. Now, nobody knows what's going to happen, but I have a pretty high degree of confidence that a new tax bill will get passed. Trump did this the first time he was in the White House. I think he will do this again because he has the exact same conditions. The Republicans control the House and the Senate, and I think a tax bill will get passed. I also think the tax bill will probably have some dramatic things, just like they did the first time. Some ways, I think it may be even more dramatic than the first time because they've learned and they've gained more confidence. But we'll see what they're able to actually get passed. But I would not be surprised if a new tax bill gets passed sometime in 2025. However, these things do not happen quickly. And it's possible that a tax bill won't get passed until the end of 2025. So make sure as the year goes on, you're keeping your financial information up to date, you're doing tax projections, and you have everything current so that as soon as a new tax bill is passed, you have information ready to go and you can make adjustments if you need to before the end of the year. It is not uncommon for massive tax bills or tax changes to get passed in December, therefore leaving you only a couple weeks to make changes. And it applies for your entire year's worth of income. So make sure your financial information is up to date and you're staying in tune with any of the tax changes that are coming. Thanks so much for listening. Hope you join us next time.